Wealthy and Smart, episode 1389.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why the market is pricing in lower interest rates. And what are those interest rates, and what percentage chance do we have of seeing dramatically lower interest rates? On Tuesday, the Producer Price Index, which measures wholesale prices, came in at an increase of 0.1% for last month. Economists were expecting the reading to show a monthly gain of 0.2% in July, so this was better than what was expected. The Producer Price Index, or PPI, encouraged investors ahead of what is coming out today, which is the Consumer Price Index, or CPI, which is expected to show an increase of 0.2% month over month, up from a 0.1% decline in July. David Russell, Global Head of Market Strategy at TradeStation, said today's PPI data gives further evidence that the tide has turned on inflation, especially in services. And when we look at volatility, it's eased sharply since the steep August 5th sell-off. The CBOE Volatility Index, or VIX, hovered below 20 on Tuesday after surging above 65 last week, which was its third highest reading since 2008. Oil prices have been stubbornly high. With tensions between Iran and Israel, prices broke above $80 a barrel, and should any conflict arise, we could see prices mid to high 90s. That, of course, is not good for inflation numbers because higher oil prices tends to bring more inflation, as the price of oil is figured into many goods and services that require transportation. Surat Sethi, portfolio manager at Douglas C. Lane & Associates, says consumers are cautious, and weak sales such as at Home Depot adds to the likelihood that the Federal Reserve can start lowering interest rates. He said, "It's just confirming what we're seeing. We're seeing the consumer slowing down. It's confirming what the Fed needs to do, which is basically start cutting rates. The big question is the Fed going to be cutting rates for the right reason, and hopefully it's more because inflation is coming down, not because our economy really needs more." Yeah, I'm not in the recession camp. I think there's about a 25% chance of a recession, but I'm still seeing most consumers hanging in there. Blackstone Chief Operating Officer Jonathan Gray said that the U.S. economy has been resilient, but there are now signs of slowdown. He said that the consumer sector specifically is seeing weakness, but that inflation is coming down, including in rental housing, and that the Federal Reserve could help the economy with rate cuts. There's nothing that we see that is fundamentally out of balance, and I do think as this slowdown continues, it gives the Fed room to cut to hopefully soften this blow. One area where he seemed less optimistic is the office property market, which he said has more fundamental issues than the rest of real estate. Yeah, commercial real estate is really having some issues, mainly because people didn't go back to offices, and we have a lot of empty office space, but also Macy's closing down many stores across the country is creating an abundance of retail space, as well as other retailers who have been closing locations. A milder than expected reading on producer prices in July was translating into fading concerns about inflation by many market participants and reinforcing traders' expectations for multiple rate cuts from the Federal Reserve into mid-2025. Fed funds futures traders were gravitating toward the likelihood of 2 full percentage points of reductions in interest rates by July of next year, 2025, which would take the Fed's main interest rate target down to around 3.25% to 3.5%, from a current level between 5.25% and 5.5%, according to the CME FedWatch tool. That would be after factoring in a 54% chance of a bigger than normal half percentage point rate cut by the Fed's next policy announcement on September 18th, as well as additional easing by year end. In other words, traders are back to the multiple cut view they held at the start of the year. Only this time, based on concerns about an economic slowdown or recession that seem to outweigh inflation worries. The trouble is that cutting interest rates this many times would imply policymakers are confident they won't reignite inflation all over again. So we'll see what today's consumer price index shows us happened in July. It's expected that the annual headline rate of inflation will hold steady at 3%, and the 12-month core rate will be slightly lower at 3.2%. And the Fed's annual Jackson Hole Symposium takes place from next Thursday through next Saturday, giving Jerome Powell a chance to weigh in with any changes to his thinking before more data hits. One of the pieces of data that is the Fed's preferred inflation measure is known as the Personal Consumption Expenditures Index, which is set for release on August 30th. And also the August CPI report arrives on September 11th, which is a week before the Fed is widely expected to deliver its first interest rate cut out of this cycle. So we'll see what happens, but people are generally saying more interest rate cuts are coming to the end of this year and into 2025. Should that occur, that's going to help the economy and help real estate quite a bit. So we'll see what happens. Inventory is still very limited, and my guess is we're going to go back to those bidding wars once again. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcast. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.